Hello and welcome back to Explain the Charts. Today is October 1st, 2025, and we are doing an in-depth analysis of XAUUSD, or gold versus the US dollar. The markets have been incredibly active, with gold smashing all-time highs, and today we're going to break down both the news driving this move and what the charts are telling us about where we could go next. The biggest story right now is the United States federal government shutdown, which officially began today. This event has injected a tremendous amount of uncertainty into the markets, weakening the US dollar and significantly boosting demand for safe haven assets like gold. We saw gold rally aggressively over the past couple of days in anticipation of this, hitting fresh all-time highs near $3,820 and even spiking as high as $3,871 yesterday. This shutdown is also complicating the Federal Reserve's job. The market is now pricing in a nearly 95% chance of a Fed rate cut this month, according to the CME FedWatch tool. This is because a prolonged shutdown could halt the release of key economic data, like the non-farm payrolls report, forcing the Fed to act with less information and likely lean towards a more dovish or supportive policy stance. Lower interest rates decrease the opportunity cost of holding non-yielding assets like gold, which is fundamentally bullish for its price. However, despite this strong bullish backdrop, some analysts are pointing to signs of a potential near-term correction. The sharp rejection from yesterday's record high has traders on alert for profit-taking. Now, let's bring up the daily chart to see how this has all played out. Looking at the big picture on the daily time frame, we can see an absolutely massive uptrend that has been in place for well over a year. The price has climbed from the $2,400s back in May of 2024 to where we are now, well above $3,800. This is a clear and powerful bull market. The price action really began to accelerate in early September, which directly correlates with the increasing headlines about the likelihood of a government shutdown. This is a classic flight to safety rally, where global uncertainty drives capital into the perceived security of gold. You can see the candles in September are much larger and the ascent is much steeper than in previous months. This indicates strong buying pressure and momentum built on a fundamental catalyst. Now let's zoom in on just the month of September to get a better look at this recent explosive move. Here you can see the rally from the low $3,500s all the way to yesterday's peak. Pay close attention to yesterday's candle for September 30th. The price pushed all the way up to a record high of $3,871.45, but it failed to hold those gains and closed much lower at $3,862.52. This created what is known as a shooting star or a bearish reversal candle, characterized by a long upper wick and a small body. This pattern indicates that buyers pushed the price up, but sellers came in with force and drove it back down, suggesting that the bullish momentum may be waning in the very short term. This is the technical sign of a potential top that analysts have been warning about, and it suggests a period of consolidation or correction could be imminent. The high of that candle at $3,871 is now our key immediate resistance level to watch. The low of that same candle, around $3,793, becomes our initial support. To see this reversal in more detail, let's switch over to the 1-hour chart. On this time frame, the price action from yesterday is much clearer. You can see the strong, steady climb leading up to the peak, followed by a very sharp and aggressive sell-off. That sell-off took the price from the $3,871 high all the way back down below the $3,800 level in just a few hours. This establishes a very clear short-term range. The high around $3,871 is resistance, while the low of that move near $3,793 is now a critical short-term support level. The price has since bounced off that support, and we're currently trading in the middle of this range. This choppy, sideways action suggests the market is in a state of indecision after that major reversal. Traders are likely waiting for the next catalyst, which will probably be news related to the government shutdown. A break below $3,793 on the hourly chart would be a bearish signal, suggesting the correction is underway. Conversely, a move back above the $3,840 area would show buyers are regaining control. Flipping quickly to the 15-minute chart gives us an even more granular view of that battle at the top. Here we can see the moment the buying pressure exhausted itself right at the peak. Notice the large bearish candles that followed, confirming the sellers took decisive control at that level. This time frame is most useful for day traders looking for entry and exit signals within the broader range we've identified. The key takeaway from the shorter time frames is that sellers showed up in force at the all-time high, and buyers must now prove they can overcome that supply. Let's go back to the daily chart to put it all together and discuss our overall outlook. To recap the important price levels, our immediate and most critical resistance is the all-time high at $3,871. A break and close above this level on the daily chart would invalidate the short-term bearish reversal and signal a continuation of the powerful uptrend, with psychological resistance at $3,900 and then targets in the $4,000 to $4,100 zone. On the downside, our first key support is the low from yesterday's reversal, around the $3,793 to $3,800 area. If that level breaks, the next major support zone comes in around $3,750, followed by the September 24th low near $3,715. So, let's talk about potential scenarios. The bullish scenario, which I believe has a high probability as long as the shutdown continues, involves the price consolidating briefly before breaking through the $3,871 resistance. This would be reinforced by continued US dollar weakness and dovish Fed commentary. The short-term bearish scenario, which also has a high probability, is for a correction down to our first or second support levels. A break below $3,793 would make a test of $3,750 very likely. This doesn't necessarily mean the bull trend is over, but rather that the market needs to cool off after such a parabolic run. The key thing to watch is the news. Any sign of a political compromise to end the US government shutdown would be the biggest risk for gold bulls and could trigger a very sharp sell-off. So, keep your eyes on the headlines and these key chart levels. Thanks for watching our analysis on XAUUSD. Please remember, this is for educational and informational purposes only and does not constitute financial advice. Trading involves significant risk, and you should always conduct your own research before making any investment decisions. We'll see you in the next video.